And everyone's
Perfect.
it up.
All right. So, hi everyone. Thanks for joining me today. My name is Michelle Downing, and I'm a principal in DGC's A&E practice. I've been working with A&E firms for 15 years, providing financial and tax advisory services. I also advise and audit FAR overhead rates for both small and large companies. During my time working in your industry, I've gained some particular insight into how your business operates and performs. I'm excited to present some key performance indicators or KPIs from our 18th annual study, which is based off of 2021 results. Our study includes data from approximately 35 firms, primarily headquartered in the Northeast, with offices throughout the country, ranging in size from 10 employees to 300 employees. As I present the results for 2021, I'll also comment on where 2022 may end up based on some preliminary data, but feel free to jump in if you're seeing something differently at your firm. Before I get to the numbers, I'd like to give you a quick overview of our firm. Not sure if everyone here is aware, but DGC merged with PKF O'Connor Davies earlier this year. Our combined firm now allows us to provide a wider range of valuable services to our clients, but still maintain our industry expertise through a focused niche dedicated to your business. Our team of industry advisors provide tailored services to help A&E firms address challenges and explore the opportunities ahead. Our team members solely focus and specialize in your industry. Although our combined firm is larger, we still pride ourselves in involving partners and principals on each engagement, ensuring that our clients receive the proper amount of support and guidance needed to attain their goals. Whether it's growing through an acquisition, trying to figure out a good succession plan, maximizing tax credits, or leveraging fast-moving technologies, we have the specialized expertise to help A&E firms grow their business. We have offices from New England to Florida and have access to member firms across the globe through our PKF network, which allows us to serve both international firms and our US clients with any international needs. So enough about us. Let's talk about what you guys have been up to. So the pandemic hopefully is behind us now, but an uncertain economy still remains. It's crucial to continue to monitor KPIs, keeping your finger on the pulse of the business. Some of the most tracked KPIs are listed here. We've also included some other metrics that are becoming more relevant, such as information technology and remote working statistics. So we'll spend a few minutes going through each one of these, starting with utilization. So this chart shows the 5-year trend of utilization calculated using total hours. So how we calculate this is direct hours, so the time spent on working on projects, divided by total hours. And total hours includes PTO. Sometimes firms may also calculate based on available hours, which excludes PTO, but this calculation here includes PTO as well. So utilization represents the percentage of total hours that are chargeable to projects. So for 2021, on average, architects held chargeability essentially flat at 63.8%. You can also look at utilization calculated using dollars. So you would take direct labor dollars divided by total labor dollars, including direct and indirect labor. But looking at it based on hours eliminates the wage rate factor that could skew it one way or another. For 2021, utilization in dollars was 61.1% compared to the 63.8% based on hours. So that's a 2.7 point spread. Paying attention to the spread between utilization based on hours and dollars is one way firms can assess whether non-chargeable labor of higher level employees is in the right range for the size of your firm. Utilization based on dollars is obviously impacted by salary levels. So if you have higher level employees, but they're less chargeable, it adds to the overhead and puts pressure on the profitability of your projects. So looking at the spread between these two utilization calculations can help you determine if your firm's aligned properly and whether you have too much salary invested in non-chargeable activities. And typically the range in the spread is 3 to 5%. So maintaining a high utilization percentage can be the key to a firm's profitability, as the two are somewhat correlated, but too high can lead to staff burnout and dissatisfaction. As it relates to staff during 2021, technical professionals were about 79% utilized, which was up slightly from 2020 at 78.7%. And principals were approximately 50% utilized, which is consistent with prior years. The lack of upward movement in utilization from 2020 to 2021 can be attributed to a couple things. A higher turnover rate resulted in more time spent onboarding and training new employees. In 2021, the average turnover ratio was 13.8%, which was up from 8% in 2020. So employees know that the supply demand scale is tipped in their favor, and they're taking advantage of moving around more often than in the past. Increased PTO also led to lower utilization. Also contractor delays due to supply chain issues, and in certain cases, contract execution delays due to economic uncertainty. 2020 didn't experience as many of these issues because things were already in progress when COVID hit. Yes, some employees were laid off, but current employees the remaining employees were able to pivot and pick up what work was left instead of rehiring. And supply chain issues didn't really come into play for contractors right away. And a lot of contracts were already executed and in progress when COVID hit. At the end of 2021, many companies were expecting that utilization was going to increase during 2022, but have since realized that many of the same issues that occurred during 2021 are still present. Therefore, we think that utilization will likely remain fairly consistent with 2021.
Can I ask a quick question?
Yeah.
Do you think that one of the things we've seen is a lot of employees had accrued vacation time, paid time off? Mm-hmm. They didn't necessarily take it in 2020 because, well, there was nowhere to go.
Yeah.
So is that part of why, is that part of the mix in 2021? Do you think you're seeing more people taking time off? So
yeah, I think so. So we do have the total hours, how it's broken out between like the direct, which we just talked about, PTO, marketing, and other. And PTO jumped from 8.9% in 2020 to 10.2% in 2021. So that was definitely a factor.
I think everyone's just going on vacation when they can. Does anyone else have any questions about utilization? All right, let's move on. A lot of these percentages too, if you use Vision or Advantage or a software package, well, you can run them, like run reports that have them over different time periods. So you can compare to this. Next up is billing multiple.
All right, so a firm's billing multiple represents the average amount billed expressed as a multiple of direct labor. So it's calculated by dividing net fee income by direct labor. So 2021 saw an uptick due to continued efficiencies by firms in managing labor. What that means is that even though utilization did not increase, the direct labor that was incurred was productive. For example, more of the direct labor incurred was billed in 2021 than in 2020. You'll notice that the billing multiple is not very consistent year over year. A best practice and ultimate goal is to have consistent billing multiple from start to finish on any of your projects spanning multiple years. So this involves measuring and monitoring the billing multiple at the project level. if you have practice group levels and firm-wide level. And doing so could provide useful insights into staff efficiency, practice management, budgeting, and pricing decisions. We saw that on average, approximately 55% of architects have stated that they have either weekly or monthly project budget review meetings. And when we compared that with engineering firms, because we also have a study on engineering firms, they there was a larger percentage of firms that met weekly or monthly, and you'll see that their billing multiple trend is a little bit more consistent. So just something to think about.
Wait, you're saying we need to meet more often to talk about projects?
Well, I just think that in terms of our study, so like a lot of the firms, only half of the firms are meeting weekly or monthly. So is that contributing to the
up and
the
down,
multiple going up and down?
Yeah, no, this is a topic of conversation that we've had before. It's like, what role does the finance person play in the project level meetings or the department level if you're a bigger firm? But yeah, it's something I think we all know we can get better at.
Mhm.
Are we ready for the next one?
Well, so I'm gonna just quickly talk about where we think 2022 will come. So similar to utilization, we're anticipating that the billing multiple will remain relatively consistent with 2021. We're hearing a lot about the industry being on fire and sentiment being optimistic, but why would we expect the billing multiple to stay basically stagnant? So the simple explanation is that even though double-digit revenue growth is expected for 2022 and potentially for 2023, in many cases, direct labor costs are expected to equal or outpace that growth with double-digit increases of its own. And then also, if you think about long-term fixed price projects, the total amount of revenue you can earn is set. So if you had a long-term project that was set a couple of years ago and it's still going on, the cost to fulfill that contract, so the direct labor is increasing annually more than what you originally budgeted for. And ultimately your billing multiple and your profit will take a hit. Okay, now next.
All right, that makes sense, because I know most projects don't have an escalation clause in them. If for the long term, we've seen some of that being put in, especially to some of the municipal and federal projects, because yeah, if it takes 4 to 5 years, like you can't use the rates from that long ago.
Yep. All right, hold on one second. I had a space heater on and now it's warm in here. Okay. The break-even multiple is calculated by dividing total operating costs, so direct labor and all other operating costs, by direct labor. So when the break-even multiple is multiplied by an employee's pay rate, the result is the amount that needs to be billed out to cover their salary and overhead, hence why it's called the break-even multiple. You can see that the break-even multiple dipped in 2020 during the onset of the pandemic and spiking back up in 2021. During 2021, spending on things like travel, meals, seminars, conferences, and other in-person expenses bounced back, in addition to increased salaries and bonuses due to employee demand. So as a result, the break-even multiple returned to just below 2019 levels. For projecting how the break-even will land in 2022 is a bit convoluted. So this calculation really hinders on 3 items: direct labor, indirect labor, and all other operating costs. So if we assume that inflation is consistent across all 3 categories and otherwise no changes to your cost structure, the break-even multiple would be unchanged. However, inflation has been affecting different costs in different ways. So if wage inflation outpaces non-wage inflation, which may be the case for 2022, your break-even multiple could decrease, resulting in increased profit. And then the opposite would be true if your non-labor costs are set to increase disproportionately to your labor costs. And you would expect in that case that there'd be an increase in your break-even multiple, resulting in decreased profit. The break-even multiple also depends on your utilization and the mix between indirect and direct labor. And then the composition of your costs also factor into this. And do you have new costs in 2022 that you didn't have previously, or vice versa?
Yeah, I'd imagine rent on offices, if people have gone remote, would be a big swing, or some of the increasing benefits too are starting to show up, at least, and that'll definitely have something to do there.
Yep. All right.
Anybody else before you go on? I'm just going to pause for a moment. All right.
All right. So this pie graph shows what made up the overhead rate in 2021. Your overhead rate represents the cost of non-project related expenses as a percentage of total direct labor. The overhead rate was 182%, up from 168% in 2020. It's no surprise that the biggest component of your overhead rate is indirect labor and staff bonuses. Total indirect labor and staff bonuses increased by 3.9 points from 2020. The next largest component of your overhead rate is employee and fringe benefits, which made up approximately 30%. Another area with the large increase from 2020 was computer and IT. This increased by 2.2 points to 12.5%, and we'll spend a little bit more time on IT later on. This pie chart's useful in assessing your current overhead structure. Another way to evaluate particularly your rent and your IT costs, which are two closely watched expenses, is to look at these costs per full-time equivalent, or FTE. And you calculate FTE by taking your total hours divided by 2080. And 2080 assumes that you're working, a full-time employee is working 40 hours per week for the whole entire year. So in 2021, architects saw rents per FTE equal to $10,000, which may seem high. However, a lot of architectural firms are located in major cities, which attributed to this high statistic. However, I think it will be interesting, like Ann said, going forward, if companies are starting to get rid of their space or downsize, how that will play out in terms of that stat. In 2021, architects saw computer and IT costs per FTE equal to $6,400. I do want to note, though, that the computer and IT costs do not include salaries related to IT staff or depreciation expense for a computer or equipment that's been capitalized. Looking ahead to 2021, we expect the overhead rate to trend similar to the break-even multiple.
And it seems like anything that you save in rent, you spent on computers, basically.
Yes, that
So
is
it might
true.
end up being the same.
Maybe we should look at those total together and see how they are.
All right. Any questions about overhead rate? I think this is an important slide, and if you can share it with other principals in your firm. I know that explaining what overhead is always kind of tricky because people don't really don't always grasp it. But I think this is a really excellent visual way to show people that this is what it takes to run a firm. Like, these are the costs. It's not just about doing the work. You've got to do all this other stuff too.
Right. And if you,
sorry, go ahead.
Oh, I was going to say, if you take a look at the study, we have a specific page related to the components of the overhead rate. So it goes down into detail even further than this pie chart. So if there's any specific questions on that, it's included in there.
It's very helpful. Okay. Next up. profit.
All right, so we talked about the billing multiple and the break-even multiple. So when you compare the two, the difference or the spread represents profit or also profit multiple. So there's been some peaks and valleys with the billing multiple closely following the path of expenses. Therefore, on average, not as many costs have been able to be passed on through to clients, which resulted in a flat profit multiple of 0.42 in 2021. So looking forward to the end of 2022, which is in like 3 weeks and crazy, the profit multiple ultimately hinders on where the billing multiple and the break-even multiple end up. We're anticipating that the average billing multiple is going to remain fairly consistent with 2021. For the break-even multiple, some firms may experience a decrease while others experience the opposite, based on the factors that we discussed going into the break-even multiple calculation. So I think this will be interesting to see where this kind of plays out for 2022.
It's interesting because it kind of makes a big difference whether it's 0.42 or 0.48 in 2019. But yeah, I think it might average out when you take ups and downs into account.
All right, next slide. Getting into some compensation.
We talk about all the time.
Yeah, so I previously noted that compensation cost was a contributor to the increase in the break-even multiple in 2021. This slide shows staff raises and bonuses as a percentage of base compensation. So raises increased slightly from 3.4% to 4% in 2021. And typically we've seen raises occur once a year, but it has become more common for firms to review this more often and have even given market rate adjustments off cycle. Bonuses increased by a little over 1 point from 8.1% to 9.3%. A lot of the firms are in process of year-end planning right now and are discussing staff bonuses. We've been seeing 10% for staff bonuses and have even seen the staff bonus percentage as high as 25%. So I'd be interested to hear what you guys are seeing here. If anybody.
Not 25%.
Yeah, that's a little.
That seems really high.
Yeah.
Quarter of your salary in bonus. Definitely have seen, and we've talked about this in the past in prior meetings, where people are giving off-cycle bonuses, specifically, especially at the end of a project, to reward excellent work, and to again try and basically almost to retain employee bonuses, to retain people, because the market is so hot still. Although I did notice that we posted a job on the BSA website, and there used to be 5 pages of jobs listed. There's only 3 pages now, so I don't know if that's helpful for people or not. But I know it's one of those little indicators that I look at, like how many people are hiring right now. And this is being recorded, so I'm not sure anyone wants to jump in and say what they're doing. We can add that to after if we want to. Share, but this is helpful to know. And again, this is for firms up and down the East Coast, and ranging in size. So I'm just curious, is the 25% one really a big firm, or is it a small firm? I'm guessing it's a smaller firm.
I think it was one of the larger firms. That's not for 2021. This was for 2022.
Oh, so it's not reflected in here yet. These numbers are gonna go up, aren't they? All right.
I'm trying to hold on. Let's see though. I have the study up on my other screen. Where's staff bonus? So in 2021, staff bonuses, the high was 20% and the low was 1.5%. So pretty big range there.
Yeah.
So we'll probably see
the same range,
high close to that in 2022 as well.
Yeah.
All right, so next slide. Employee labor rate. So this is another view of compensation cost trending over 5 years. This is the total hourly labor pay rate, and it's calculated by total direct and indirect labor divided by total hours. And in the study, we also have the direct labor rate and the indirect labor rate as well. This does not include any staff bonuses. The total labor rate increased from $44.67 to $45.74, or 2.3%. And the increase in this KPI is a result of the continued raises given throughout the year. For 2022, we expect that compensation costs are going to continue to go up as the cost to retaining employees is increasing. And we're seeing 8 to 10% for raises for 2022. The high last year was 7% in raises.
Wow. So this is, that makes the top the bottom of this year,
Mhm.
8 to 10%.
All
All right, does
right.
anyone have any questions? Just a quiet group today, okay.
All right, so another statistic that we look at by employer FTE is net fee income, which represents how much one full-time equivalent is generating in net fee income. This KPI has continued to trend upwards over the last 5 years. In 2021, net fee income per FTE increased by approximately 8%. The increase can be attributed to firms dealing with increased volume and staff shortages. So in other words, lesser employees were supporting more volume. As I previously mentioned, firms will want to keep a close eye on this to ensure employees do not get burnt out. For 2022, the majority of firms increased their billing rates. Whether the increased billing rates will cover your increased costs will remain to be seen. So as such, the trend for this KPI will really depend on that, as well as your staffing levels.
Yeah, I know staffing levels are a big concern. We've had some conversations about that. There's a HR group, an HR and admin group at the DSA too, that talk about staffing issues as well. So
yeah, that's definitely been a hot topic,
yeah.
Staffing. All right, next slide. So in addition to the profit multiple that I went through a few slides ago, another way to assess and benchmark profitability is profit as a percentage of net fee income. This represents the percentage of profit that a firm retains in the business before principal bonuses, but after staff bonuses. In 2021, although net fee income grew 8.2%, the profit percentage decreased from 15% to 14.4%. And this decrease in the profit percentage is a result of increased costs, which led to smaller profit margins. At the end of 2021, firms were estimating net fee income growth anywhere from 5 to 15% for 2022, but we don't know how much will drop to the bottom line. The profit percentage will most likely go down in 2022 due to continued increased costs expected, but it's still unsure, as I talked about before, if these increased costs can be passed on to your customers. An additional area to think about is contracts with labor caps and how to negotiate bigger annual increases, which are more aligned with current inflation rates.
That's really hard to do.
Yes.
Just saying. All right. This is the slide where it's just like, yep, everything's all tied together.
All right. Days sales outstanding, or DSO, represents the average collection period for a firm's receivables. So this chart shows the DSO trending downward over the last 5 years. And in fact, DSO is at its lowest point over the last 10 years at 91 days in 2021. So it is important to note that this is an average, and DSO is impacted by your project mix, such as public versus private sector, or whether you're a prime or a sub-consultant. In addition, how you get paid by either check or electronic payment can have an impact to your DSO as well. Many firms that we've been working with feel that inflation and economic uncertainty are a significant concern for the industry. And as a result, we believe that DSO will suffer in 2022 as customers take full advantage of take advantage of full payment terms instead of paying ahead of time.
Yeah, I think the drop over the last 10 years, at least in my experience, has been, electronic, being able to generate bills more quickly. It used to take weeks and now it's not. And then mailing them electronically and having them paid electronically, all of those things make it faster. You don't have to wait so long.
Yes, definitely a huge factor.
All
right. Okay. Working capital as a percentage of net fee income. So working capital is calculated as cash plus your AR, any prepaids that you may have, subtracting your accounts payable, and any other short-term obligations that you may have. So this is an indicator of whether a firm has retained a sufficient level of capital and liquidity to fund its annual operations. As this chart shows, in 2020, there was a significant increase in working capital as firms had excess cash from PPP and they kept it on hand at year end. In 2021, overall working capital remained relatively consistent and well above the industry average due to companies conserving cash due to economic uncertainty. Typically, firms with working capital of 20 to 25% of net fee income have financial flexibility to manage downturns without incurring additional debt. So it's important to make sure that you're reviewing the quality of your working capital. Looking at your AR and any unbilled WIP that you have to ensure that any uncollectible or unbillable amounts are properly reserved for, because if they're not and you're including those amounts in your working capital, you may be inflating that and it may just not be accurate. We expect this KPI to decrease in 2022 because companies will most likely be using reserve working capital to help offset increased costs, or we're also seeing some companies thinking about excess working capital to fund some initiatives that they might have put off during COVID, such as acquisitions, investments in technology, or maybe even entering new business lines. And all of that will lead to reduced working capital.
I know that in the past, we've also talked about working capital as like the number of months you should have on hand.
Yeah. So, typically on average, it's about 3 months. So, you could look at it that way, or looking at it as a percentage of net fee income.
Yeah. It's just helpful ways to think about it. And then that makes sense to me whenever I have to explain it to people. It's like, well, when you do the work, you have to pay for it, right? And then you bill the work and then you get paid. So there's always a lag. So that's why you need working capital and why it's so important.
Right.
And net fee is just your total amount that you bill minus the direct costs. So
correct. Yep.
All right. IT.
All right. So these are some new stats we tracked this year related to IT. Some trends that we've observed are that 31% of architectural firms outsource IT. The majority of firms do have cyber insurance at the end of 2021. And that's no surprise based on the environment that we're living in today and the constant attacks and breaches that we hear about. Professional service firms like yours have not historically been a target by bad actors, but have become more attractive in recent years. And firms that we've seen that provide periodic employee awareness trainings and also conduct simulated phishing attacks against employees have been more successful in thwarting off these types of attacks. Cybersecurity regulations for government contractors is also increasing as a result of all this activity. For example, the new CMMC rules require third-party audits of DoD contractors' cybersecurity practices. So if you're a firm that works with the DoD, this may be something you'll want to look into to make sure that you're in compliance with these rules. In regards to IT budgets, 36% of firms have them. And of those firms that do have an IT budget, 75% of them have a dedicated cybersecurity component. IT continues to be a hot topic in your industry. Firms are grappling with the increased computer and software costs. And in addition, cyber attacks are continuing to be present. So firms should continue to stay focused on this area and making sure that they're performing routine self-assessments of your IT environment, as that's a best practice.
Okay, I have a question about that routine assessments.
Mhm.
When you said like they send out fake phishing and see who that is.
Yes.
Okay.
So
I've never heard of that before.
our firm actually does it as well. So I don't know, I would assume that there are different IT companies that do this, but the firm that we use is called KnowBe4. And we basically have a button in our email that if it looks like it's spam or a phishing attack, you press that button and then we get a message that says, congratulations, you've identified a phishing attempt that was, performed by your organization or something like that. So they basically send out bad emails to employees and you have to identify it.
It's almost like gamifying it, really. I've never heard of that before, so I'm really interested in that. We do regular reminders, and I can say that the frequency is increasing. We've definitely been talking about cybersecurity as a firm more often than I would have thought we would, but makes sense.
Yep. All right.
Remote working. We've talked about this before in this group. It's nice to see a graphic.
Like it or not, remote working is here to stay. Because of the nature of work involved, less than a quarter of firms are working fully remote, but they're not 100% back to the office either. Because of this, approximately 30% of the surveyed firms are making office space changes, either ahead of their scheduled term expirations or at the time of renewal. And we've also seen that subletting is on the rise as well.
Yeah, we've talked about this a lot in this group and in the HR group. And it seems like over time, it'll be curious now that you're tracking this to see how it changes year over year, and whether there's one of the last meetings we talked about was this push to return to the office and what that means. So I'm glad that it's being tracked.
Yeah, so for 2022, we're continuing to ask this question, and then we're also asking how many days are you requiring employees to be in the office? So
requiring being the key word there, because some firms don't require, they just recommend. That's the language around this has really been interesting to track.
Yes.
All right.
So today was just a glimpse into our studies. I invite you to visit our website and you can download copies of the studies, which also include stats on billing rates, salaries, other useful information. Like I said before, we do have an engineering study as well. So if you have any friends in engineering firms, let them know.
Or you pay engineering firms?
What is that? Oh, yes.
you
Or if
pay
you
them?
pay, yes. If, any firms are on here today and you participated, thank you. If you want to participate in next year's study, feel free to reach out. My contact information, I think, is in the next slide. Yeah. But if anybody has any questions or comments, right now, I'd love to hear about like what you guys are seeing for 2022 as it comes to a close. I saw that the inflation report came out this morning for November and it came in at 7.1%, which was down from October at 7.7%. And then the AIA's ABI for October was 47.7, which was the first time it was below 50 since January of 2021. I think November comes out tomorrow.
Explain what ABI is, annual billing index, right?
Yes.
Yeah. They track
So
it too.
yeah,
You know what I'm gonna do? I'm gonna stop sharing now because I think this
Okay.
is, and I actually have everyone who RSVP'd to this, the link that you clicked on, the invite had the link to the study.
yes.
So that you can, anyone can go back to that invitation if you don't feel like going to yep.
Could I ask a question about one of the slides? I don't
Oh
know if
yeah,
we-
let me, I'm gonna stop sharing. I'm gonna stop recording. And then we can keep talking about it. So
Okay.
hold on one second. I have to remember how to do it. Um, Sorry. It's recording.